Good afternoon, ladies and gentlemen. It is now noon 25, right on time here at the Cash Compound Coaching Hour and sessions that we do on Thursdays. It's kind of an Ask Us Anything, an Ask Me Anything type of hour where we walk and talk through code cracking cash flow conversations to help you understand the save and spend system and how you can be in a financial position of guaranteed growth and cash flow with the money that you earn. Got a couple of coaches with me, as I always do. And Jonah, the other of the banking bros, is running some of our technical support today. But we've got two other great coaches in the office. We're going to join you on Instagram here in just 1 second. So, Jesse, what we're going to do is go, nope. We're going to join the Banking Bros Instagram from my personal one there. So, yeah, we're going to join it. Okay. So, shout out to everybody who is on Facebook and YouTube, Facebook and YouTube. We see you out there, and we hope you get into a conversation with us shortly where you can ask your comments, your questions, and your concerns. Just throw them all in the chat, and we'll walk and talk through all that stuff. There you go. Join that live. There we go.
Beautiful.
Okay. So let's introduce our coaching staff for today. Head coach Jay Dew, been practicing this idea for 9.5 years. And what I've got under my belt are several of these infinite banking style policies. What are those? We'll get into that in a minute. But I've just crossed a big threshold in terms of how much money that I've committed in premium to these accounts that are guaranteed for my family to have windfalls of cash throughout lifetimes and in death. Income tax free, ladies and gentlemen. So I've been practicing this since March 11th of all days, 2016. Jesse, who's in studio with me here on my right, we'd love to hear from you, man. Tell us the story.
Yep. My story is I'm from North Carolina, married with kids, saw this concept back in 2015 and just felt like I'd been unplugged from the matrix and saw a different way towards financial independence and pursued it. And it has been that for sure, just a different paradigm.
Love it. Jesse, come a little closer to me here. The way we've got our camera set up, I can move a little bit.
No, I understand what it is you want.
There we go. My man.
Rub
Okay.
shoulders.
All right. And we've got Coach Sean in the game as well. So, Sean, tell us about Legacy Life, who you are and how you got here.
What's up, guys? Yep, Sean King here. So I live out in Pensacola, Florida. Very similar to Jesse. I actually had an experience where it felt like, the Matrix. So much so, and I was such a big fan of that movie that I actually named my son Keanu after Keanu Reeves. And that's essentially the realization that I had with infinite banking is, man, everything I thought I knew about money, about growing my wealth, about doing all the things that I'm supposed to be doing was kind of wrong. And so when I found out about this, kind of dived into it head first, started reading a lot, started going out to different events, started following and trying to get mentorship from other people. And that's kind of led me to the position where we've got 5 policies in my family. Been practicing this for a little while now, used our policies for all sorts of things, paying off debt, traveling the world, investments. And it just keeps getting better every single day, which is absolutely incredible.
Appreciate you, Sean, giving us that intro. And here's what I want to talk about right from the jump. Those of you who are joining us here, it is the bottom of the hour on the East Coast where we have our studios. It is 12:30, but put this time in your calendar. So wherever you are, all across the U.S. and Canada, if you want to be in a conversation about your cash flow, that you don't miss this call because we really practice this. That was the idea. We really do this every single day. And Sean gave you a laundry list of things he's been able to use it for traveling. And he does a lot of that.
Yep.
For his student loans. And we heard you guys have a lot of those out there. Jesse, you're done with student loans, right?
I'm done.
Okay,
yeah,
I'm done too.
Hit that a few years in the stride of paying off debts and stuff.
Yeah.
So, now we've been a few years without those hanging over us.
All right. What's up, Nelson? Good to see you out there. Sorry we were a little bit behind. We are glad that you are live with us. Nelson is in a different state, and we do help people all across the U.S. This week, just yesterday, one call was Arizona for me. Where have you guys in the recent week, maybe even in the last 7 days, had some coaching prospects or clients about using this process?
Yeah. Alabama
Alabama?
and South Carolina
Mm-hmm.
and one more. Now I'm drawing a blank.
I've had South Carolina this week, which is not every week, but I sat with a guy who's a real estate investor in
North
my
Carolina.
area, North Carolina, where you live. We're near the border here. And Sean, how about you in the last week?
Let's see. We got Georgia, South Carolina, Florida, Hawaii, and Texas.
Okay, love it. All right. Let us know where you are. Joel, who is on YouTube, following us at The Banking Bros on YouTube. Probably a subscriber out there, Joel. Hopefully you are. Where in the world are you, Carmen Sandiego? Mr. Nonay, San Fran. One of my favorite people is in the San Fran area. She's on here from time to time. KKOK, I think, is how she normally has her handle. So if she's out there, big hug to her. What's up, Rob from Wisconsin? Appreciate
What's
you
up,
guys.
Rob?
Okay, so one of the things I wanted to walk and talk right through today is because we've had some new material out there for our clients, but we're going to introduce it to you guys, even if you're not working with us yet. Is we're talking about utilizing life insurance, but I've said the word cash flow at least twice so far. How in the world do you use life insurance for cash flow? Thought that was for death. Thought that was death insurance. That was for burial. That was for final expense. But we're talking about utilizing money from the insurance company, a collateralized, guaranteed, liquid pool of money, a policy loan. Jesse, just this week, we've had a policy loan new package of teaching and education for our clients.
That's right.
And this coming Monday, I heard you're up. You're going to help us understand how policy loans, what they are, and how they can be used
Yes.
in this life insurance product that we didn't even know you can get money from.
Yes, the optimal way to get to money actually is what we're going to be showing. It's a way for you to be able to grow your cash flow, to be able to do that in a guaranteed fashion, have uninterrupted compound growth, but you get to leverage that growth at the same time. So it's just the optimal way to be able to get to money for the things that you're going to do in life anyway, whether it is Sean's travel or my paying off student loans or business opportunities or whatever it is.
Sean, give us a couple of reasons that the policy loan is better than the third-party bank loan or credit card, and why it might even be better than cash.
Definitely.
List a few things. Well, give us. Come on, prove it to us. Why?
A few things, man. When was the last time I recently went through and got a HELOC on my house? The only thing that they didn't do was personally violate me.
Okay,
I mean,
right.
I had to give them everything to get that loan. So one,
Yep.
no permission needed for someone else to access that money. Two, credit checks. They're not checking my credit when I'm getting a loan from my policy. The bank wants to know all about everything in my past that I've been doing. And then three, it's private. Everybody's going to know that I'm taking money out from the bank. That's very easily able to be pulled up and found. When I'm taking a loan from my policy, that is a private transaction. So those are just a few reasons why it's so great. And then you asked me to explain why it might be better than paying with cash. 2 words, opportunity cost. When I use my money to pay for something, I pay for that item, whatever it may be. That money's gone forever. Great, maybe I got an item, whatever it is, but I no longer have the ability to continue earning money off of that cash ever again. If I use OPM, other people's money, which is what I'm doing when I loan the money from my policy, I'm able to earn continuous compounding and growth in my policy, and then take that money and purchase whatever it was that I'm purchasing, investing in, whatever it may be. So I could essentially be making money in 2 places at once if I'm utilizing it for investment outside of my policy.
I got the visualization. You know, you've seen it in the movies, that snap of the latex glove.
All right.
Yep.
Of the
That's
TSA
that's
agent
where
or
you would
whoever's
go.
getting ready.
You'd go there.
Sean saying everything shy of that moment right
Right.
there was done.
Yeah. So, ladies and gentlemen, let's recap a few of those things. When you're utilizing or accessing money from an insurance company, it's because you've got a guarantee from them that they owe you money already. Does everybody understand that if you buy insurance, your dollars, your pennies have turned into their dollars, right? Insurance premiums are a little bit that makes them have to pay a lot. You write a little check, they have to write a big check. Life insurance is the only guarantee out there that there will be a incident. There will be an incident. I'm getting my English right here. All right.
Let's do it.
I want to sound educated. There will be a claim in whole life insurance. Put some respect on it. Capital W, ladies and gentlemen. Okay. We are talking about whole life insurance. And just this morning, I got a call from a guy who says, hey, I want to do this. I remember you coming to my office. He was a real estate guy. And in the KW world, how many of you know KW? Big insurance company, the largest one, I think, now in the world.
Real estate.
And he said, hey, I want one of those policies for infinite banking, one of those whole IULs. No.
Gotcha.
No. Bah, I'm going to punch him in the gut. So universal life insurance, the U part of the UL, universal life insurance and index universal life insurance are not what we're talking about, because the flexibilities actually take away the guarantees. Not because it's an evil thing, but the flexibility from the insurance company, from the market, exposure, from you, make the guarantees go away. So we're not going to use those. Okay. We are talking about whole life insurance. So it's a 5-letter word with a capital W. We want you to be proper about it. Okay. So we are going to use those types of policies. There's a guarantee payout there. The insurance company owes you money. So they allow for you to borrow against the collateral of that guarantee and the cash value, today's net value of that future death benefit. That's why you can get money. That's exactly how this bad boy works. Okay, so prior to understanding infinite banking as a term, here's the question. You had been, no doubt, sold. Somebody in college who you went to school with, one of your frat buddies, probably started selling.
Frat.
Well, I'm just saying, somebody who you knew in school, somebody that Sean went to school, I went to school, you went to school. Somebody got recruited to sell insurance. And they sat you down and they talked about term insurance and they talked about permanent or whole life or universal insurance. What did you think about this product prior to understanding it from an infinite banking style lens? Did you like it? Did you buy any? I'll be honest here. I didn't. And there were some reasons for that. But Jesse, you may have had another encounter with this. Did you have life insurance? Did you even think it was a good idea?
My first introduction would have just been from my first full-time job after college, where there's going to be somebody from HR who gives you all the paperwork for the work insurance, right?
Yeah,
so I had the work insurance and I didn't do anything beyond that. By the time I got to my second job and my wife and I had our first son, so we had our first child, then I did think, it did occur to me, because I'd already had one job, got to another job, they had work insurance as well. But then I did think, well, I should own something more, a bigger number, right? Get more protection, and I should privately own it. So I went out to the local box store, talked to my box store agent in my hometown, and got more insurance, more death benefit.
Okay. All right, Sean, how about you? You out here watching movies and stuff. We got Morpheus, we got The Matrix, we got Red Pill, Blue Pill. What'd you think about insurance prior to understanding it from an infinite banking standpoint? Were you out here just playing Call of Duty, watching Matrix movies, or were you thinking kind of seriously about this product?
First of all, I don't play video games. So if you do, sorry, if it's good for you. I don't play video games. Do love movies, though. But I didn't think a whole lot about insurance beforehand. I'm trying to think back, and this is actually kind of crazy. I think the first person that ended up sharing the idea of insurance with me, hey, you should get insurance, was a buddy that I actually ended up working with when I got into insurance. But a few years prior, he shared with me what I believe was the infinite banking concept without actually knowing that it was the infinite banking concept, because I was paying something like $1,000 a month for a short while into this thing that I believed had the ability to grow guarantees. I know it wasn't an IUL at the time. So I haven't really thought about this in a while, but now that you're asking this question, when was the first time we were kind of introduced to the idea of just insurance in general? Who shared it with me? I think that was the first time. And of course, I got involved. I ended up dropping it. And then years later, I got into the business of insurance and learned more about it and realized, holy smokes, this is maybe what I had my hands on previously.
Yeah, isn't that crazy? So my kind of introduction to life insurance probably came from just what Dave Ramsey would have taught about insurance. But I had a guy from college, he was older than me, but I became kind of popular as a speaker in my hometown. And so a guy who was older than me, but kind of saw me out there, he probably wanted to get to my list of referrals, right? And that's totally fine. Like
Sure.
that type of thing doesn't bother me much.
Business.
Yeah, that's just business. And he sat me down and he educated me for 2 hours. I sat down with him and I went to his office and he started talking about what insurance did for you with a guaranteed protection.
Mhm.
Let's get it in now. Jadu, you're about 24, 25 years old. And that means over the course of the next 30 years, we were looking at a term that was one of our options that you're locked in. And as you get older, the price will cost more for the same amount of death benefit. But we don't want your mama or a potential future wife, not married at the time, to have to bear that burden,
Mhm.
putting you in the ground. It cost about 20 grand to put you in the ground in this town. I was like, man, that's legit. So I was very excited about learning this in terms of money safekeeping.
Sure.
Yeah, I was down. However, Brother Dave, Uncle Dave, Big Daddy Dave told me, you go straight to hell after that funeral. They would put you in the ground for 20 grand. You go straight to hell if you buy whole life insurance, right? And I was like, no, we can't do that one. Plus, look at
It's
the
written in Leviticus
cost.
somewhere.
Leviticus, the Old Testament, ladies and gentlemen, right? You slaughter the fatted calf and go straight to the demons or something, right? So how many of you had that thought? Throw it in the chat right now. Am I being too dramatic, or what was your first encounter? Was it a college buddy? Did someone recruit you to sell it as well, like Sean? Did you get pulled into it? Nobody is 12 years old wants to sell insurance. I mean, like, we find this out after we graduate and you realize, man, I can't get a job right now. Okay. And so let us know if that's you. Throw it in the chat. We want to have your feedback and your questions, comments, concerns. Did you buy something from HR? Did a buddy sit you down and educate you, showed you some charts and graphs? He was drawing upside down, right? He was drawing stuff upside down. Y'all been in this meeting,
Impressive.
right? And I was like, I mean, this is making sense. I should buy some insurance. I should buy some. So I did. So I bought some term insurance for 30 years, 25 to 55. I remember that being my term. I bought what I think was either $400,000 of coverage or $500,000 of coverage. And I bought it from the big box stores. And eventually one of my buddy who sold it to me, jumped ship to another company. And I bought it from that company. I decided, hey, I'll stick with my boy and I'll just trade in this policy, get rid of it, and buy a new one. It was fine for me. Like I said, I didn't have any problem with that. If I was in his position, have to call on people who are canceling all the time. I mean, he took the time to sit me down.
Yep.
I was like, I'll buy it. It doesn't matter to me. And I think he was even telling me one or two benefits. Look, it's $2 cheaper a month over here if you go with my new company. And this is a company, both of these companies, massive companies we've all heard of. I was like, I'm down with that. So, we've got some feedback there of Brad over here on Facebook. You can catch us in two places on Facebook. By the way, ladies and gentlemen, if you have not liked our page, The Cash Compound, find us there. But we have a private group, okay? And we control a group called the Infinite Bankers. And that's where you can ask more specific questions and get into the culture of what we're doing with other people. We're trying to figure this out with you. But Brad says, Dave Ramsey, barf. Now, I love Dave Ramsey. I honestly do. I think he's very wrong about his life insurance conversation. Lots of consumer spending challenges that most people have. You can think about Dave all day. That could be very helpful. What do you think?
Yeah, I would say the same thing. The way it came to me was he's not completely right. That's all.
He's not completely right.
He's emphasizing some things that are true or can be true when it comes to life insurance. But then, as far as in general, obviously a superb businessman, best-selling author,
Yeah,
team builder, et cetera. He is who he is, but he's not completely right about insurance.
That's another thing that I want to bring up, Sean, here. He's
Yes,
not
it was.
completely right about insurance, and that's because he might be a little bit what we call inch deep and mile wide on certain topics. Here at the Cash Compound, you should understand something. We know a lot about one particular subject.
Yeah.
And this one particular subject, we get into nuances that are very important to understand if you ever want to bring up that term, infinite banking concept. So how would you describe that, Sean, when we're talking about this guy, Dave, and all the things he talks about and the one thing we talk about?
Again, I think he talks about a lot of very accurate things. I think debt is kind of his big thing, and making sure that you're not overspending and allocating money correctly and all this stuff, which I definitely agree with. You guys were pretty nice about. I don't like Dave that much. I think he's kind of a snake in the grass because I believe he's smart enough to know what he's talking about. He actually knows the value of what we're doing, but he's built this empire around buy term and invest the rest. So he can't really come out and just say like, oh, I actually lied. I did more research and I realized that whole life insurance properly structured, utilizing it for infinite banking is actually a good thing. So that's my opinion on him. I think he is a smart guy, but I also think he's kind of a snake in the grass. What was your question?
Yeah, so we go a mile deep on this one topic.
Yes.
Yeah.
And so Dave has got a lot of things to talk about, and he's very broad, and that's great for a lot of people. Obviously, he's helped a lot of people. It's totally fine in that regard. There's a lot of people who are better off listening to him than they were before. So that is some of the props, but we're specialists around here. So
I just think the more that you go into, this is what I found when I was looking into this, the more that I learned, the more clear it became that this was actually what it was. Like the best way that I find out to uncover things and find out if this is true, if that's true. Like I used to be very involved in IULs, and the deeper I dug with the companies that were offering them and the more that I uncovered, the less I had belief in what they could actually do. With whole life insurance, properly structured the way that we do it and all the education that we provide, the deeper you dig, the more that you like it, the more guarantees, the more safety, the more security, the more benefits that you find. So you could do that inch deep kind of thing and just say, hey, whole life's the devil. This is bad. Dave told me it was bad, all of that stuff. Or you could actually go out and educate yourself. If the information's in books, just read, just listen to podcasts, just do a little bit more education and actually find out the truth and then make your decision, whether it's, buy term, invest the difference, or whether it's getting into infinite banking, maybe do a little bit of both.
I love it. Shout out to all our people over here on IG. Can you read some of those? I'm not sure that I'm seeing them on this particular feed. Do we need to respond to any of those folks? They've got some folks who found us on the Banking Bros channel on our Instagram. So join us live there too Thursdays.
Yeah, I may or may not be able to make sense out of all the comments.
All right.
What I would say is that on that note, that the average person out there, and that could include Dave because he's great at some things, doesn't mean that he can't be blind to the one thing that we can talk a mile deep on, right?
Right.
I don't think that people are aware of banking as a function.
You said it. You said banking is not what he ever brings up.
He doesn't talk about banking.
But no one brings up banking unless you're going a mile deep on the infinite banking concept and realize banking is always happening. It's around you. It's very profitable and you can control it. And if you don't control it and your bank, as you would call it, and your bank controls your banking, you are missing out on wealth building. Big time. That's not what Dave ever talks about. So that's a big deal. So we're working on a YouTube series right now, ladies and gentlemen, around that. Glad it got brought up. Maybe that's why it was on my mind. And we've got an intern in the building who's a family member, senior in college, rising senior in college, who's working on some YouTube scripts right now. So you'll be seeing at least me. I think I'm going to be passionate about this having been a huge Dave Ramsey fan prior to discovering the infinite banking concept for myself. And I'm probably going to go through that and help you understand that the product of whole life insurance, the process of banking go hand in hand together to help you stay in control. All right, Jake is jumping in with a previous thought on his first insurance policy. He got it from his employer and the bank offering me a small policy. How many of you get those things in the bank every year?
Banks, from the credit
Yeah.
unions. Yeah.
My credit union offers me $1,000, $10,000 for like 18 cents every other 6 months or something like that, right? Every other 6 months. That's also known as annually. Sorry about that, everyone. I'm not an idiot. Brad says, buy term, invest the rest. We put that up on the screen there for a second. Yep. How many of you know A.L. Williams, Primerica? Buy term, invest the difference. Buy term, invest the rest. That is doesn't work, basically. Basically doesn't work, and or you wouldn't do it if you had the opportunity. And everything that you see in the investment world is gross numbers. And I don't mean throw up gross. I mean, it is not net of fees, commissions, and taxes. Those things are huge. They're part of your life and my life. Fees, commissions, and taxes are a big deal. And you're going to see every number out there that has nothing to do with that. I mean, I like the NBA. I like sports. Sean and I talk basketball every once in a while with my brother. And you see these contracts, super max contracts. They're going into them right now in the NBA. If you follow the NBA, we had a draft. Everyone else had a draft too. Everything but, which is the one draft that is not in the summer? Which one is it?
The military draft?
The military draft. There you go. All right. They're doing contracts right now in the summer, right? This is kind of the portion of the year where nobody's playing except baseball. And these numbers are not. These numbers are taxes, people. That's what I'm trying to say. Taxes.
How about inflation? I mean, that's the one that jumps into my mind too. If you follow that route of buy term and invest rest, if you actually do it, I mean, what's inflation going to do to you if that's 30 or 40 years from now, on top of what you just said?
Well, it's speculative, of course. There will be taxes, but it's speculative on what it's exactly going to be for you. At the same time, you're always going to have to report things that are gross and not net of taxes, fees, and commissions. Very big deal. So we want to remind you of that. So getting back to kind of the core concept that we were pushing toward is we do have a new way to think about and a very systematic outline of what policy loans are, why we can get to these dollars income tax free, and how it kind of works from an insurance company standpoint. Because you have a policy and cash value net numbers that are current dollars that you could borrow from the insurance company, we've got an ever increasing pool of money to use because we own these whole life insurance policies. And we've put that into a course that we're refining for you. And we just launched it to a group of select folks this week in our community. We want you guys to get access to that as well. So we're going to invite you to join us on a cash conversation call with one of our coaches. Let's do a consultation about your situation, ask your questions about policies and policy loans, the liquid portion, and maybe even join us on Monday. So what are you going to be going over on Monday for the community at large here? And invite them to be a part of this free call.
Absolutely. So just the mechanics of it, the nuts and bolts of it. We're talking live with folks going through their questions about what does that look like? Hey, I learned about this infinite banking concept. I own one of these policies now. How do I make the policy loan? How do I handle policy loan repayments? What are you doing with your policies?
Yeah.
What have you used? Policy loans? All that kind of stuff. So it's a structured call in that we have the ability to speed up your learning curve by sharing our best practices, etc. But it's also a great time to be able to field your particular questions and such.
All right, Sean, I want to ask you, one of the things that I was not as prepared for as our community wanted and needed, as I led the first intro preview call to our policy loans course and our walkthrough, was policy loan repayments. policy loan repayments. So let's talk about that for a few minutes. We've got some folks who are working with us on this call right now, including my man Jake. And tell us about repayments. If it's a loan, should we repay? Do you repay? We're all practicing this here. So be transparent with us and help us understand what is this? Why would I? How do I? Is it my money? Why would I borrow it? Give us a little something.
So when it comes to loans are tax-free in the US. So understand that this is money that we're getting, whatever we're sent. There is no need to pay taxes or anything. Like Jadu said, it's net. So because we're not using our money, we're using the insurance company's money, that comes with a fee. I'm going to call it a clean 5% just to make things easy. So if I'm borrowing out $10,000, as a good banker, I want to schedule the money to be paid back to myself over time. Any dollars that I pay back to my $10,000 loan, let's call it, is decreasing the amount of interest that I have to pay and becomes automatically usable again if I decide I need to loan it out again. So the flexibility that we get with these properly structured whole life insurance policies is when, how much, and if we ever want to pay it back. Again, as a good banker, you want to pay yourself back because that's going to allow your policy, your banking system to get ever increasingly larger and larger by paying yourself the interest that you would have been paying third parties. But it's all on your time. And that's the greatest thing about the flexibility is your guy's life, stuff happens all the time. Usually every 3 to 6 months, something happens where you have a big expense come up. If you had taken out a loan or had racked up credit card bills elsewhere, they don't care that something happened in your life. They're expecting these payments every single month on time for the amount that you have to pay them. With this, you get that flexibility. So I like to set up, I have a lot of loans out. They're out in investments. They're out in other things. I have a bunch of loans out, but I like to set up reoccurring annual or monthly payments to my policy back to myself, put that cash back in there, lower that interest that I'm going to be paying back to the policy over that period of time. And then when I get extra cash that comes in, either from my investments or whatever it may be, I funnel that back into the policy to knock down that interest I'm going to owe anyways. But at the end of the day, it's 5% simple interest. If something happens, we always talk about the idea is to die with loans out, because I got this big pool of money that's guaranteed to be paid to my family tax-free that'll go ahead and wipe those loans clean, and they'll get everything that's left over after that. So I actually want to be using my money right now.
Love to hear it. And what's up, Jermaine, out there in the ATL? Appreciate you being here with us. He's joining us on YouTube. I know we were a little bit late today. We are going to cut things in the middle of a great conversation, but we want to remind you that if you are interested in being able to get these policy loans, you're going to have to get an account set up, aka buy life insurance that is set up, properly structured in a way that allows you an ever-increasing income tax-free passive pool of money to get to. I mean, that's the type of money I'm looking for.
Yep.
Sean was mentioning that it's private as well, so it's not going to be on any public record. This is a big deal for wealth building, ladies and gentlemen. So few people understand how it works, and many people who are using the terms around this idea are still going to have a poorly designed product in their mind. They just don't know. They couldn't help you with it. And so that's what we specialize in here. We're going a mile deep on the idea of becoming your own banker. This text right here, published around 2000, originally from our mentor. He wrote it down in a book. The billion people have come into this world prior to me showing up. Some of them wrote down some things that I've got right here in my hand to help me. And this guidebook right here is how and why you should become your own banker, and lots and lots of things about the product that we're going to use for it. We suggest highly that you get that book and put it into your wealth building library and review this idea so we can rethink our thinking individually. You don't need to rethink my thinking or rethink Sean's thinking. No matter how good Jesse is going to be on Monday, it's not his thinking that we're trying to challenge. It's your own thinking about becoming your own banker and utilizing money in the most efficient product and process way. So that is going to talk about banking, not just debt, not just investments.
Right.
All right, ladies and gentlemen, another thing with my man Brad here. How can I repay over the interest rate that the insurance company says to pay, like Mr. Nash
Awesome.
says to do? Like if that is set at 5% and you pay 10%, how can I do that? Jesse, take it away. Perfect question. I love that one.
Great question.
Absolutely. And there is a very clear place in the book where it will say the additional interest, which is just giving that market rate like you're describing. I love your numbers. Great, simple. If an insurance company is going to charge that 5%, like you're saying, and like Sean said, that extra 5% is actually and tactically just going to be additional premium. See, we build these policies custom for use, right? For infinite banking. So it can accommodate, it has the flexibility to receive additional premium. So what that's going to do is speed up. I mean, if you are already on an uninterrupted compound curve, well, it's going to accelerate that. It's going to raise that. It's going to speed it up. So there's going to be additional premium that you pay into your policy, which inherently then means the death benefit goes up, the cash value goes up, and you'll earn bigger dividends than you otherwise would have, which just is making you more efficient in the future for the next financing that you do.
That's a great thought, Brad. Once again, what we are doing is we are repaying loans, yes, and we are putting additional dollars into the insurance company's pocket and into our policy. Depends on if we're paying off any loan interest that we had on our outstanding loans. But because we are utilizing mutual insurance companies, we are our part owners of these companies. So because you're a part owner, you win again. You're going to be earning bigger dividends, all that type of stuff. Brad, if you have not sat down with any of us or you're not working with someone, we would love to be your new coaches, whoever you get. Go to saveandspendsystem.com is a great place to find any of us. And we'll be happy to walk and talk you through this process for yourself. And that exact question right there. You don't have to buy anything on these calls. We're not setting you up for failure. We're setting you up for the education so you know what to do. Yep. Nelson said it really great. If you know what's going on, you'll know what to do. We're just going to make sure you know what's going on. All right, folks, we're going to have to jump here. We will see you next Thursday. We would love to get in a cash conversation with you and consult you and your family how you can raise your level of financial awareness, independence by becoming your own banker. So we'll catch you next time.
See y'all. See you, Sean.
Peace, fellas.
You are now tuned to the banking bro. Said we couldn't make it, drink us super choke. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer. We taught you how to be the bank.